Recessions often take everyone by surprise. Around the globe, markets are flashing warning signs that the economy around the world is teetering on a cliff's edge. And the question of a recession is no longer if but when. There's a perfect chance the next one will not. Experts say that there's now a 98% chance of a global recession, according to research firm Ned Davis, which brings some sobering historical credibility to the table. The firm's recession probability reading has only been this high twice, in 2008 and 2020. What does this mean for people around the world? Find out by watching this video. Since at least mid-2022, politicians, economists, and market professionals have been engaged in a great semantic debate over whether the U.S. economy is headed for recession or not. The main argument, which is influenced by politics, came down to how you define the word recession. Economists have also been forecasting a recession for months, and most see it starting early next year. Whether it is deep or shallow, long or short, is up for debate. Still, the idea that the economy is going into a period of contraction is the consensus view among economists. As all the central banks across the world simultaneously increase interest rates in response to inflation, the world might be edging toward a global recession in 2023, as well as a string of financial crises in emerging markets as well as developing economies which would do them lasting harm, according to a new report by the World Bank. The central banks around the world have been hiking interest rates this year with a degree of synchronicity that has not been seen over the past 5 decades, and a trend that is most probably going to continue well into next year, according to the report. But still, the currently expected trajectory of interest rate increases along with other policy actions may not be sufficient to bring the worldwide inflation rate back down to levels seen before the pandemic. Investors are expecting the central banks to raise global monetary policy rates to up to 4% through 2023. This is an increase of more than 2 percentage points over their 2021 average. Now, unless supply disruptions and labor market pressures subside, the study finds that those interest rate increases could leave the global core inflation rate that excludes energy at about 5% in 2023, which is nearly double the 5-year average before the pandemic. And to cut global inflation to a rate consistent with its targets, the central banks may also need to raise interest rates by an extra 2 percentage points, according to the model report. If this was accompanied by financial market stress, global GDP growth would slow to 0.5% in 2023, and a 0.4% contraction in per capita terms would meet the technical definition of a global recession. Despite negative economic developments throughout 2022, the NBER is not ready to say that the current economic expansion is over. That's perfectly fair, especially since GDP has been on an upward trajectory for the past 2 quarters, and employers are still adding workers at an impressive clip. The NBER is looking for a big drop in economic activity across the economy, not just in a few sections, and the labor market is a glaring outlier. Moreover, the decline generally needs to last more than a few months. A big exception, of course, was the recent COVID recession, which lasted just 2 months. But that decline was so severe and so widespread that the NBER had to be flexible with its definitions. Generally speaking, though, the NBER will want to see each of its 3 criteria for the decline depth, diffusion, and duration met before it'll make a call. The economy may not officially be in a recession, but it's not looking great. Just keep in mind that not every data point we rank above would be weighted equally in deciding whether the US is in a recession. The strongest parts of the economy are concentrated in the labor market, thanks to low unemployment and a large number of unfilled jobs. Meanwhile, consumers are enduring high inflation better than they did in 2022, and hopefully, prices will continue to moderate in the months to come. Parts of the economy susceptible to higher borrowing costs, particularly the housing market, have not fared well. A recession is considered to be a prolonged economic downturn that broadly affects the economy and typically lasts 2 quarters or more. The National Bureau of Economic Research, which is the arbiter of recessions, considers how deep the slowdown is, how widespread it is, and how long it lasts. However, the NBER could declare a recession if any factor is severe enough. For instance, the pandemic downturn in 2020 was so sudden and sharp with the wide-reaching impact that it was determined to be a recession, although it was very short. Also, the Federal Reserve's latest economic projections show the economy growing at a pace of 0.5% in 2023, and it does not really seem to forecast a recession. What are your thoughts on this? Let us know in the comments section down below. If you enjoyed today's video and found it interesting, then make sure to leave us a thumbs up. And do not forget to subscribe to our channel and click on the bell icon to be always updated with the most exciting content as soon as it's uploaded. Thanks for watching. See you again soon in another video.